What's up, Banter fam? Welcome back to the show. I'm your host, Miles, and in today's episode, we're going to be going through what Kwon said in his latest interview. He has finally broken his silence since the UST Luna collapse back earlier in the year, and he's finally revealed some insightful things into what actually went down over that weekend and what his plans are for the future. So I want to dive into everything that he said and pick through what he actually alluded to in this interview. And then I also want to reveal two tokens which I think are benefiting from this narrative. So obviously the collapse of UST has left room in the market for a decentralized algorithmic stablecoin, in my opinion. And also it has led to many projects migrating from Luna to other ecosystems, which I think are benefiting a lot from these other ecosystems. So in today's show, I'm going to be going through those two projects and exactly what Kwon said in this interview. It's going to be a big show. Happy Monday. Let's get straight into it. When I look at the charts now, before we get into any Kwon talk, I'm seeing Ethereum holding support on this diagonal. So no need to panic yet. I saw a lot of people switching from bullish to bearish overnight on Twitter, but I don't think there is a reason to panic. I mean, we did wick up to around 2050 2 days ago. Now we are coming down and we are testing this diagonal support line. If we look at the 1 hour, this is really the key zone that I'm looking at the moment for Ethereum, obviously being the leader of the alts. It is this support trend. Now, if we do close below on the 1 hourly, that would be an indicator for me to flip bearish temporarily. But as long as we can hold this support, I'm not panicking just yet. We can see that we have this horizontal orange range, which is still acting as nice support. And we had multiple touches over the last day or so. Look, 1, 2, 3, 4, 5, over 10 touches on this orange line here. So until we actually break below both the 200 MA, this diagonal, and this orange box, then I am not panicking. But obviously, if that does happen and we do get an hourly close below this zone, then that would be an indicator for me to flip short. And that is probably a trade that I'll end up taking. And I'll probably end up taking it on the BYBIT competition. As you guys know, the Banter hosts are all trading against each other at the moment in the competition. It's a lot of fun. And there's $100,000 worth of prizes up for grabs if you join. You only need $250 to join. And there's a link in the description to trade along with us. Of course, you do need a BYBIT account to be eligible for the competition. So there's also a link to get yourself a BYBIT account and a $4,200 sign-up bonus if you sign up. So get involved. It's a lot of fun. And I'll be trading after the shows on my Instagram every single day. So what did Kwon say that was very revealing yesterday? So basically what he did is he did an interview for the first time in a long time with Coinage Media. And this was the first time he actually broke his silence since the Luna UST collapse. Now, we've seen little tweets from him here and there, but he hasn't really had much to say on the Luna event itself, apart from some pretty shallow apologies in the very beginning. But we finally got a little bit of a glimpse into the world of Kwon and a glimpse as to what the future of the Luna and the UST ecosystem holds. Now, obviously, a lot of you think Luna and UST is dead, but is this the case? He alluded to some interesting stuff at the end of the interview. So what I want to do is I want to break down exactly what he went through in this interview and break down some of his key points. The first thing that is a major takeaway from this whole situation is that this collapse took Do completely by surprise. He said, I didn't think this would happen. I haven't found the words to describe what it feels like. And in hindsight, there was a lot of beliefs and conjectures I had made that were wrong. So this is the first time that we've seen Do, I guess, admit defeat and actually admit that he was wrong to some extent. Now, the major talking point over Luna's collapse was obviously Anchor Protocol sustainability. Was Anchor Protocol's plumped up APR to blame for this UST short event? He said, just to set the record straight, the consensus of what people wanted to do with the interest rate was a several %1,000 APR, and he felt like every day UST was getting stronger than the previous day. So he said that his team actually wanted a multi-1,000% APR, and they actually had to rein it back to a 20 to 30% APR in the very beginning in order not to be unsustainable. Well, it turned out in the end that 20% was likely unsustainable, although I don't actually point Anchor Protocol sustainability as the reason for the UST downfall. This was obviously due to the major short event and the illiquidity in the curve pools, which ended up causing mass panic amongst Twitter and inevitably resulted in the UST Luna collapse. So I think he had a valid point there to do with Anchor, and I certainly don't dispute it. Now, the next major talking point was the Bitcoin as reserve currency choice. We know that he picked Bitcoin as a reserve currency to underpin the UST peg. Now, this obviously received a lot of criticism post the collapse, because if he had used potentially another asset, a stronger asset, which wasn't as volatile, then maybe they would have been able to come in and defend the peg a little bit better. Now, obviously, UST was algorithmic, and it was only partially collateralized with Bitcoin, and it was only collateralized like around 20% with Bitcoin. So no matter how many holdings of Bitcoin they had at the time, it still wouldn't have been enough to underpin the peg. So whether that had been Bitcoin or stablecoins or Ethereum, the likelihood, in my opinion, still would have been the same. But it's interesting that he admits here that he said if we were optimizing for economic stability, we probably would have built up a reserve in stablecoins. I believe too strongly in Bitcoin. I honestly didn't believe it would fall this much. So at the time, he didn't think Bitcoin would take such a substantial hit, and it probably had a tangible effect on their ability to defend the peg, albeit I don't think it would have mattered in the long run if they had used stablecoins or Bitcoin at the time, but it certainly didn't help. And I think Bitcoin's weakness certainly played into some of the fears surrounding Anchor Protocol and Luna, because if you guys remember, at the time, the market was showing some weakness. It was breaking down off the back of some macroeconomic headwinds with the rate hikes in the near future. And that resulted in the Bitcoin drop. And in tandem, we did get this major UST short event, which resulted in the collapse. Now, I think the most interesting part of this entire interview was him running us through his thought process and running us through that infamous weekend of the UST collapse. And he went through his mental state at the time, which I personally found quite interesting, because it's the first time that he's touched on this, obviously, since the collapse. And he got quite raw and vulnerable. And he said that he saw the sentiment on Twitter starting to get worse and worse, and the amount of sell pressure we're seeing started to get worse and worse. He said what they started doing to defend the peg, he woke up, noticed illiquidity in the curve pools, said, well, something's wrong here. So over the night, he stayed up and they tried to put together a $2 billion round to come in and defend the peg. What happened, though, was before that they could come in and defend it, the news actually leaked. So when the news leaked, it resulted in a lot of FUD starting to spread around on Twitter. And we know how Twitter is a catalyst for many big events, as sentiment kind of takes a hold of the retail side of things and can result in significant market movement. We've seen this time and time again with Twitter being kind of that focal point of where the crypto community resides. And this FUD ended up resulting in a lot of shorts piling up against Luna. That obviously resulted in institutions getting on board, coming in with big money, shorting UST, shorting Luna, and the snowball effect kind of took real hold here and ended up in the Luna price being decimated. And you guys know that Luna was their mechanism to defend the UST peg, because with the redemption mechanism, they would sell Luna in order to buy back UST or burn UST. But what happened was, they would sell Luna to mint UST, and to defend the peg, they would mint more Luna in order to sell it, and then obviously burn UST supply, which would get it back down to peg. But they couldn't, because the Luna price got decimated, which ended up resulting in lower Luna token values, which basically did nothing to defend the peg, because they didn't have enough value on the Luna side to underpin UST's value. So that just resulted in things eventually spiraling to zero. And that was the infamous death spiral that a lot of people talk about. So he said that for 8 days he didn't sleep at all. He also said that he only ate half a burrito over this period of time. And when asked about whether he regretted some of the overconfident language, because we know Kwon, one of the biggest knocks on his character that, and a lot of qualms that I've had and you guys have had, is his overconfident language to do with Luna. It was the kind of inability to take any other considerations into account, any FUD into account, any criticisms into account, and kind of use this over confident and bullish language on Twitter and constantly arguing with people. He said that he developed an alter ego, and that in retrospect, he thinks that some of the comments, or the manner in which the comments were conveyed, were cringe. And he thinks that due to the series of wins that they had and the scale that UST and Luna were growing at, that this increased his confidence as Luna and UST just grew and grew in strength. And just to wrap this up, this interview, Zach asked, you kind of seemed all right with the event, because Doe kind of seemed a little nonchalant in his tone throughout the interview. And Doe responded, you can't be emotional about markets, you can't blame people for shorting, and you can't call people idiots for longing. So he was quite, I guess, rational about this entire situation. So what do I think? What do I think of Doe's response in this interview? Firstly, I think a lot of it was kind of filtered. I think that he probably didn't have the legal ability to comment on some of the events that went down, specifically when it came to the Chai payments accusations, and when it came to talks about legal ramifications or whether he was a fraudster. I feel like a lot of it was edited down, and some of it probably wasn't as transparent as it could have been. I think he genuinely did show signs of remorse. I think, honestly, I came away from the whole interview feeling bad for Do Kwon a little bit, even though I know he misled a lot of people, and I know he certainly would admit that he did a lot of wrong in this situation. At the same time, I kind of did feel bad. He said, like, Luna was his life. He put his actions where his beliefs were. He bet big and he lost. And he describes when he was asked how much he'd actually lost, whether it was in the billions, he said it was down infinite because his entire life was invested in this. So I do feel kind of bad in that sense. But at the same time, I think some could probably look at this interview and think maybe he was a little too robotic, or maybe even some have said he's a little sociopathic. I'm not necessarily a psychologist. I won't comment on the exact tone in which he conveyed himself. I just feel like maybe there's a little bit being held back here. It wasn't that raw interview I was hoping for, where these tough questions were really asked. A lot of it was filtered, and he kind of beat around the bush with a lot of points, especially when he was directly asked about fraud implications, etc., which I understand from a legal perspective. But overall, let's look at this final comment to substantiate what is actionable for us as investors. And he ended the interview by saying, if my thesis is right, then I think what I spend time doing over the next 20 years is going to be more meaningful than what happened after the last 6 weeks. Now, you can take this at face value and say that he's going to continue working on Luna and working on the ecosystem and trying to continue to pioneer and innovate, but the Luna token itself is not showing much strength. I'm not much of a believer in this new Luna ecosystem. I personally moved on as an investor. So the question then becomes, where are we moving on to, and what good parts of Luna can we take forward into our own investments? Now, there's one that I think is standing out at the moment. There's actually two that I'm going to talk about in today's video, but there's one which has really impressed me. And that is actually Kujira. Now, if you guys don't know what Kujira is, it's basically an AMM, but it has 3 different features to it. It's got a public marketplace for liquidations. It's got a decentralized permissionless order book style token exchange, which offers liquidity pools on Cosmos. And then it's got Blue, which is a KUJI dashboard, which is essentially for KUJI holders to stake, bond, and hold and vote on governance. So it's got 3 very cool features, and they have impressed me so much. If we look at the KUJI price, now this graph is slightly skewed because there was an airdrop, but if we look at the price, since this UST collapse, and we can see this exemplified at the bottom here, if I just zoom in a little bit, we can see this collapse. As soon as they did the airdrop, the price has spiked right up. So after the airdrop was around 42 cents, it's now sitting at $1.20. So it's almost 3x since the airdrop. Now, this is very impressive because the Kujira team has had to deal with losing their main chain, losing the bulk of their audience, losing the bulk of their liquidity. And they've gone, no, we're not going to stand for this. We have a great product that we believe in. We're going to pivot. So they launched on Cosmos. They conducted their airdrop to existing holders, and they're stronger than ever. I'm going to go through some of the stats in a second because it's mind-blowing, but they are stronger than ever. And these 3 products, I think, fill a critical gap in crypto. Why? Well, Orca and Fin specifically enable you to actually get tokens for cheaper prices because you are benefiting off the liquidation of assets. So you can participate in securing your favorite assets and get discounts on them. So my one knock on Kujira right now is that there isn't that much liquidity, but as there is, and as more people use this ecosystem and it builds out over time, it makes it significantly cheaper to swap in Kujira than other exchanges. This is why the Orca liquidation platform is very cool. If I connect my wallet, you would see the dashboard of the markets. There's local markets and there's Kujira markets, which have KSM and other stake tokens available. The Fin, which is their active product right now, their decentralized and permissionless order book, is the one generating the revenue for Kujira holders. So a percentage of revenue is paid back to holders. So I guess technically you could put Kujira under this real yield narrative, which has started to rise to prominence. Now, this decentralized order book essentially operates using a decentralized trading experience where there's no inflationary incentives and no bots and no impermanent loss. You guys know that other DEXs power their token swaps through liquidity pools. Now, this is a good strategy, but it does open those liquidity providers up to impermanent loss, especially if they're not diligent with their holdings. Now, they're taking a slightly different strategy because they've built this order book style token exchange on Cosmos that looks like this. It's a very cool exchange, and there are multiple different assets to swap on the Cosmos ecosystem. And they'll only have more assets over time that come to this exchange as time goes on. And their third product, Blue, is essentially an AMM, a DEX, which is very cool. And it's also a KUJI dashboard for you to stake and earn rewards based on Kujira. So as a token holder, you want exposure to the growth of a protocol. You want exposure to the value accrual based on the revenue that it generates. At the end of the day, the best investments in DeFi are the ones where you are directly exposed to the upside. And I think that, as JPEG Jerk points out here, is that inflationary farming APRs that we've seen from multiple projects that I pointed out last week. You guys know Sunny, you guys know Saber, you guys know Time, PancakeSwap, Trader Joe in the beginning. They all dilute the value of the token, which is a disadvantage for the investor. KUJI has a thesis that it's sticking to, that they only want to offer sustainable yield. They only want to accrue long-term value for the holders and the ownership of the token. And I think the cool part about the ecosystem is that they are only trying to benefit the holders long-term. Their primary goal is all geared towards, and we could see this through their tokenomics, accruing value for the KUJI token itself. So KUJI, it's a decentralized order book. It's a liquidation market. It has no pools, so no inflationary APYs, meaning if you stake in a pool on a typical DEX, they'll flood that APR with tokens in order to incentivize you to stake. KUJI has none of that. They don't incentivize liquidity pooling. So there's no slippage, no impermanent loss. I don't think LPs are a bad thing in crypto. They're just taking a different model, a unique model. And instead, they give you two different opportunities through exposure to non-inflationary fees via staking, meaning you earn a 0.5% yield. It's kind of small, but over time, as the revenue generates, this ideally will increase. Betting on KUJI, you are betting on this ecosystem increasing their ability to accrue feeds. But as he said, it's real yield through network fees. Would you rather earn 1% of real yield or 10% of fake yield? Well, I'd argue I'd rather earn real yield because the token at least has a minimal basis, a starting point that can't necessarily, it can be based on market conditions, but based on dilution, doesn't change because the token isn't being emitted as much. So I think it's cool. There's a lot to go. It's a very new product. They've just launched on Cosmos. And in fact, if you're investing now, you're not investing on the current ability to accrue revenue. You are investing on its future ability to accrue revenue based on your belief in the protocol itself and belief in the team to execute on this vision of this multifaceted decentralized order book. Now, if you do believe in them, then buying the KUJI token makes a lot of sense. And I know a lot of you guys are fans of it. One knock I have on KUJI is the relentless shilling on social media. I generally don't know if it's bots or not. I generally don't know if it's just the hype behind it right now with this real yield narrative, but I'm seeing a lot of talk on Twitter. Usually when I see a lot of hype on Twitter, that's an indication that something's getting a little frothy. So I am implementing quite a strict DCA approach with KUJI. I'm taking it very, very slowly with a long-term time horizon because I don't necessarily like the amount of hype that is behind it on Twitter. Now, this could be viewed as a good thing because the community is super strong. We know how important communities are in crypto, but I've learned my lesson in the past, and I don't like to get sucked into shilling or anything. So that's the one thing I'd note. But I guess on the positive off the back of that, we have proof now that the team is able to execute under harsh conditions. They are able to be resilient, diligent with their roadmap, and we've seen that from their transition from Luna to Cosmos and their success in doing so. So that is the first protocol that I think is benefiting from Luna's collapse, because I think unlocking the Cosmos ecosystem and finding that point of difference inevitably is going to be more beneficial for Kujira than they would have been if they were on Luna. And that's crazy to say, but I genuinely believe that. And we could see this now exemplified through their $89 million market cap, which is crazy to think that they've been able to achieve this on Cosmos. It's a great success story. And then the second token that I said I would talk about today is Frax Share. Now, I'm doing a video on this later in the week to give you a more in-depth, comprehensive overview of what Frax Share does, how it accrues value, and where I think it slots into the decentralized economy. But right now, what you need to know is that UST is offering a little bit of a gap for an algorithmic stablecoin to come in and take some market share. UST collapsing, although it was a terrible thing at the time for crypto, and we're still feeling the ramifications through 3AC, through Celsius, through Voyager, the general market liquidations, a sentiment hit. There was a lot of ramifications from the Luna collapse, but one of the good things to come out of it was, I guess, the warnings around what makes a successful and what makes an unsuccessful decentralized stablecoin, and where developers need to pivot to achieve sustainability in this area in the future. I think Frax Share learnt a lot from this. They've made a lot of updates to their model since the UST collapse, whether that was indirect and planned or whether that was in direct response to the USD collapse, we don't know. What we do know is that their major focus is on utility. And as long as a stablecoin is offering utility, there will always be demand for it. Now, it's not just purely algorithmic. Some people in the comments will say, oh, it's the next UST. No, it's not, because it's a hybrid between an over-collateralized hard asset, which is redeemable on chain, and it has a partially algorithmic part of the supply. So technically, it's collateralized enough to withstand a short event. It's not the same as Luna. It doesn't have those same death spiral mechanics. Of course, any stablecoin could depeg if there's a hack, etc. That's always a risk with stablecoins. It's even a risk with USDC and USDT. Now, the risk is minimal, very, very, very minimal in that case, but it's still possible. But I think what you need to know is that Frax operates very, very differently. Now, just to clear up any confusion, Frax Share FXS is the token, the governance token of the Frax ecosystem. This is the token that accrues value from buying back and burning based on Frax demand and demand for Frax. So the more Frax that are minted, the more Frax Share that are burnt. Similar to Luna in terms of how it accrues value. Hopefully without the death spiral this time. But Frax operates a little bit differently because it doesn't have a direct redemption mechanism. That's the key difference between a Frax Share and a Luna. So Frax itself, which is FRAX, is the stablecoin, which is obviously pegged 1-to-1 with the US dollar. And we could see, although it has been slightly volatile in recent times, it's never lost peg. So that is one good thing to note since it launched last year. It's never lost peg. It certainly is more volatile than your centralized stablecoins, but it still has managed to keep peg even during times of massive sell pressure. And they are executing this vision. 4 key notes to really note about the vision that they're trying to execute. Sam, by the way, is a genius founder, which is kind of why I like Frax, because I really do back his vision and his ability to execute. It's their ability to benefit off USDC censorship. The Tornado Cash situation took a lot by surprise, with USDC being banned on a lot of different exchanges that has been linked to Tornado Cash. I think that the Frax kind of does step in and benefit a little bit from this, because people don't like censorship and people like decentralization. And I think there's now more than ever a need for a decentralized stablecoin economy, which is obviously one of the major things that they're trying to execute. FRX ETH is a new proof of stake staking platform, which is launching post Ethereum proof of stake merge in a month, where users can deposit ETH, receive 1-to-1 FRX ETH, which is a derivative, and stake it in the curve pool, which will basically be like staked ETH. So they're kind of, I guess, competing with Lido for a little slice of the staked ETH pie, but a little bit different. You can read through the exact details of this in the notes from the recent Twitter Spaces that Boccaccio has posted. We can also see that Frax is working on a roll-up that is a little bit of a while away, but this is one of the biggest bullish catalysts in the future for the ecosystem, which is changing how they do cross-chain issuance, building towards Frax being interoperable, so not relying on bridges. So they don't want to keep their liquidity on bridges because that exposes themselves to hacks. So what they're going to do is they're going to have a Frax Rollup, which aims to solve these fundamental issues and change the issues that are related to bridges directly. And they're also looking at Trinity Part 2, which is the next big upgrade, which is Frax Lend and Frax Swap. So they're launching a DEX and a lending platform. So they're eventually going to have a roll-up, a DEX, a lending platform. They're already a key governance accruer in the Curve Convex ecosystem. They already hold a lot of governance that they direct to their token holders. And if the stablecoin does fill at least 10% of the void of UST, then that would mean that it starts to gain more adoption amongst various ecosystems. We saw UST deploying on AVAX, Phantom, obviously before the collapse. It started to really take a foothold in these DeFi ecosystems. I see Frax potentially as a stablecoin that can do the same thing. Are there risks? Of course. I'm not blindly bullish. I am very aware that stablecoins can depeg. Hence, I position it likewise in my portfolio with a percentage around 1 to 2% of my total portfolio, which I'm happy in a detrimental event to lose. But it's a bet that I'm taking if I look at DeFi protocols alongside Kujira, which is a much smaller percentage of my portfolio. My DeFi portfolio, aims to collect protocols that can successfully accrue value, Frax being one of them, Convex being one of them. Some of the tokens I talked about last week in the Real Yield video, if you haven't seen that, there's some more there, but Frax is definitely one of them. And I think that the pivot away from UST ended up being a bullish thing for Frax itself, and the price hasn't really moved too much. Like, it hasn't rallied to the same extent that some of these other coins have off the back of this ETH narrative. Do I think it can come down a lot lower? Yes. Definitely not aping now. Its low was $4. Do we see those lows again? I think we definitely do in the next 6 months, and that's only a good thing for long-term accumulators. So I will save most of my positions for DCAs when we approach the lows, and that's going to be a long-term hold. It's probably going to be like a 2-year hold for me. I'm very cutthroat when it comes to my positions now. I've become a lot more willing to take heavy profits, cut losses off the table. That's kind of the style of my trading. It's switched a little bit from this kind of hodl mentality to being a lot more aggressive with profit taking. Frax is, I think, one of the rare occasions where I'm kind of just looking at accumulating and holding with probably aggressive profit taking if there's any substantial rallies. But I do see the upside of this token as being kind of like a multi-year play, considering it does have a lot of potential off a $480 million market cap. That's just one token I'm looking at. Ethereum, still just holding the support. Keep your eyes on this support line. If you want to screenshot my chart, you can screenshot on your phone now, draw it in your own chart, come up with your own trend line. Obviously, trend lines, in a way, are subjective, but this is generally what I think is looking to play out on Ethereum if we break this. Probably more downside in the short term. We can also hold this and approach new highs. Very, very possible. But I'm seeing a little bit of weakness in the stock market now, so I'm a little bit wary of longs right now. In fact, I think the risk-reward play is actually to the downside in the short term. That's my opinion on the ETH chart. Just before we head off, I am going live on Instagram after this, by the way. So those who like to join me on Insta, get your phones ready to switch across. But GALA Film, one of the major sponsors of the show at the moment, is launching a decentralized film product, which means you can earn rewards for watching films and also participate in this Web3 governance entertainment ecosystem, which I find very interesting because we don't really have many decentralized ecosystems which enable you to earn rewards from watching films. I think it's one of the cooler products going around that they're about to launch. And obviously I'm sponsored, so we have to say that, but I genuinely believe that, irrespective of the sponsorship. There's a link in the description to check out the nodes for GALA Film. If you want to learn a little bit more about it, we'll play the video for you guys now. Link in the description to check out GALA Film if you want to get yourself a node. They're expensive, but for the whales in the chat, I think it may pay off. They are quite expensive, but maybe if you could chip in with a few friends, look at getting a node. That would be an okay thing to do if you do believe in this ecosystem. I'm going live on Instagram now. You guys know my Insta. Just for those who don't, Miles_Deutscher. There's a link in the description. You guys know I also follow back some people that join me on the live. We have a lot of fun. We look through trades. I answer questions that I didn't get time to answer on the show. So yeah, head over to Instagram now and I can chill with you guys and answer some questions. But if you're going to stick around on the YouTube, I will see you tomorrow at the exact same time, 7:30 p.m. EST. Peace out.